Good afternoon, everyone. I am Li Xing Gan, Financial Market Strategist at Exness, and this is your market outlook for the 12th of September 2024. Core inflation in the United States unexpectedly rose by 0.3% in August, driven by rising costs in housing and travel. This marks the largest monthly gain in 4 months, pushing the annual core CPI up to 3.2%. The rise has led traders to lower the probability of substantial rate cuts by the Fed next week, shifting focus to more measured adjustments. Expectations for a 25 basis point Fed rate cut in September rose to 87%, up from 70% in the previous day, with market expectations aligning more with smaller adjustments. Despite these changes, the Federal Reserve remains focused on the labor market dynamics as a key factor influencing future policy decisions. In other news, we have the Bank of Japan. The Bank of Japan would likely hold interest rates steady in its upcoming meeting due to the ongoing market volatility and the recent impact of the July rate hike. Current plans suggest that maintaining the rate at 0.25% during the September 20 meeting. The Bank of Japan's decision will also follow a report showing slower but still strong economic growth in the second quarter. And although officials remain open to future rate hikes, they are closely monitoring economic and financial conditions, including the US economic performance and potential impacts on global markets. And also in a significant milestone, the Japanese wage growth is set to outpace inflation for the first time in over 3 decades. This change follows this year's spring wage negotiations and could enhance consumer purchasing power, potentially driving increase in domestic demand and also stimulating economic activity. The Bank of Japan's focus on sustainable inflation driven by wage growth could pave way for future tightening by the Bank of Japan, which in turn provides additional support to the yen. And elsewhere, we have the ECB, European Central Bank, is poised to cut its deposit rates by 25 basis points to 3.5% today. This decision follows a similar reduction in June and a pause in July. Despite the anticipated rate cut, ECB officials remain cautious about committing to future policy trajectory, due to the ongoing inflationary pressures, particularly in the services sector where wages are rising. So looking ahead, markets are monitoring developments with anticipation for future ECB rate cuts in December, potentially bringing the deposit rate down to around 2.5% by late 2024. This is seen as a neutral rate, which neither stimulates or constrains the economy. ECB President Christine Lagarde's upcoming press conference would also offer additional insights into the bank's future policy stance. Now with that, let's take a look at our chart. So I'm currently on the Exness web terminal. This is a chart on Euro-Dollar on the 4 hours time frame. We can see that Euro-Dollar has been holding within a descending channel and prices are pairing recent gains after reversal below the 1.1050 region and also the EMA 21 dynamic resistance. So if we do see price sustain its bearish momentum below this zone, a further decline towards the 1.0980 region could occur. You can see that this area also aligns with the lower bound of the descending channel, this area here. It is also an area that has been tested as both a support and resistance. So this is on Euro-Dollar, and if the 1.0980 region break, we could see extension of the weakness with 1.090 as the next potential support. Conversely, if price does a pullback and breaks above the 1.1050 region, we could see potential for a deeper retracement, and with 1.1120 as the next potential resistance. So that's it for today's market analysis. Thank you for joining me. I'm Li Xing Gan, Financial Market Strategist at Exness.